Well, Wipro turns 75 today, and in fact, the buyback offer also opens today. It's a buyback worth 9,500 crore at a buyback price of rupees 400 per share. And today, 29 December 2020, is the day when the buyback offer opens. It ends on 11th of January 2021. In fact, Wipro has stated that it is going to buy back 23.75 crore equity shares via the tender offer route, and the promoter group had indicated their intention to participate in the buyback. This was when the buyback was announced sometime in Q2 itself. The promoter group holds nearly around 74.01% of equity shares. In fact, if you look at Wipro has gained close to around 56% in the year 2020 itself, while it has underperformed the Nifty IT peers, because the Nifty IT index itself has gained close to around 54% in 2020. Wipro has certainly outperformed the Nifty, and Nifty has given returns of 14% in 2020. The question is, should investors really tender into the buyback, especially when the current market price itself stands at somewhere around 385 rupees per share, and the buyback price itself is rupees 400 per share. In fact, we spoke to Hemang Jani, who is the equity strategist, senior group VP at Motilal Oswal, and he stated that there are the few factors that one needs to look at while deciding if we should tender shares in the buyback. The first is, of course, the current market price, or the upside potential rather, from the current levels, and also the second one is the acceptance ratio. While typically the acceptance ratio is relatively low for the retail shareholders, Hemang believes that given that the current market price itself stands at 385 rupees per share and the buyback price is rupees 400 per share, it does not make sense to tender in the buyback, as there is not much upside left from the current levels. Having said that, he states that for long-term investors, it would be good to hold on to the stock, as he believes that given the new CEO has come and given the good deals that have been signed very recently, and the margins, of course, of Wipro have improved since the new CEO has joined, he seems to be fairly bullish on Wipro as a stock as well as on the IT sector. However, in fact, if we look at what analysts across the board also do state, while most of the analysts still have a neutral rating on Wipro stock price, as they still want to get more visibility in terms of how the strategy under the new CEO performs. Macquarie, of course, has an outperform rating on Wipro with a target price of rupees 416 per share, and Macquarie expects the USD revenue to grow anywhere around 8 to 10% over the next couple of years. In fact, Wipro very recently, just a few days back, announced a large strategic deal with German wholesaler Metro AG. It's a 5-year deal which is going to be extended for 4 months, and the estimated deal value for the duration of the first 4 years is $700 million, with the potential to in fact scale up to $1 billion over 4 years. It's a large strategic deal announced under the new CEO. So yes, for investors who are looking to get a quick exit and want to cash on this opportunity, probably buyback is the route, or they may even go ahead and choose to just sell shares directly in the open market, because the arbitrage is not much. For long-term investors who are fairly bullish in terms of the new CEO, possibly they would want to hold on to the stock for further more upside from the current levels.